I pulled my 100K plus X followers to find the most common constraints holding back your trading, and now I'm sharing how to overcome them. You all really surprised me, so stick around to see what 1 in 4 of you are struggling with. Let's dive into the smallest category first. 5% of traders said they don't know where to start. Well, congrats! You don't know where to start, but you still ended up at the right place. Because between subscribing to this YouTube channel and following me on X, there is already a massive trove of free information for all types of experience levels. As a new trader, one of the first things you want to do is learn about the concept of a trading playbook. I've already made a video on it, and once you're familiar with this concept, what you want to do is use a program like Evernote or Notion and start to catalog different charts and lessons and observations. Yes, trading initially is extremely overwhelming, but taking notes, writing down your questions, and getting everything organized in one place is going to help you make forward progress, even when it doesn't feel like it. The second most popular category, just above 7%, was those that don't know how to find the right stocks to study and watch. You always want to be following what I refer to as in-play stocks. These are stocks that are making standout moves on fresh news or due to extreme technical patterns. One easy way to find many of these is to set up scanning filters and search for stocks that are up the most by percent, down the most by percent, or doing the highest volume versus their average daily volume. Don't have any of these filters? Don't worry. Once again, I have you covered. On X, for years now, I've been tweeting out what I felt the best trading opportunities were each month. If you do an advanced search for top ops, you'll find all of them. Compile a list of those, save the charts, and try your best to categorize and reverse engineer them per the playbook concept discussed before. Additionally, X is an amazing resource for real-time information on what tickers are most relevant each day. Not only am I often posting about popular charts of the day, but tons of other accounts on there that I frequently repost, like Investors Live, are commenting on the best moving tickers in real time. The third most common segment was almost 8% of traders openly admitting they can't manage risk. That's probably underreported. Truth is, it's higher, and here's why this matters. Risk management means survival. Without it, even the best edge is worthless. Multiple times per year, I have traders reach out to me because they made huge sums of money but never learned proper risk management and then went on to lose it all. By the time they contact me, the damage has already been done. If you take nothing else from this video, remember this: every single trader needs a daily max loss limit, ideally instituted on the broker side to prevent you from being your own worst enemy. Additionally, every single trader should have a series of rules about how much they are willing to lose over different segments of time before they pause their trading until they've identified the issue, stabilize themselves mentally, and are ready to repair the damage. How much are you willing to lose in a week? How much are you willing to give back over a month? If you reach those limits, how will you cut yourself off, or how much will you size down, and how will you choose when it's right to re-engage or size back up? I can't tell you how much money that simple advice would save traders. The fourth category, at around 10%, were traders who are struggling to find edge or a functional strategy. Finding edge, in my opinion, is the hardest part of trading. People copy random strategies off X, YouTube, or Discord. Much like people do with diets, traders never stick on one path long enough to ever reach their goal. It takes consistent effort, it takes experimenting, it takes struggle. Without edge, trading is just gambling. So how do you find your edge? This topic is extremely long and is one I'll need to break down more over time. I'm covering the different types of trading edge and how to utilize them in one of my next videos, so make sure to subscribe and turn on notifications to not miss it. For now, my simplest recommendation is to start cataloging and taking screenshots of stocks making the largest, craziest moves. Large stocks, small stocks, anything doing a ton of volume, especially so if the stock is moving on news. Build up that database and try to reverse engineer why those moves happened and how you could have captured them. We'll get back onto this subject in a bunch of other videos. A fifth segment, with 13% of responses, were traders who felt restricted by PDT, or the pattern day trader rule. I actually have two pieces of good news for you. First, this rule is under consideration to be lifted. Not definite as of the time of this video, but I do suspect over time it gets removed. Meanwhile, the other piece of good news is not meeting PDT forces you to be incredibly selective with your trading, and that can be very useful early on. Trade a demo account, conserve your ammo, then on the couple top setups each week, trade those live. One of two things will happen. If you don't have edge, you'll lose money and shouldn't be trading more actively and should be in demo refining your strategy anyways. If you do have edge, your account is going to grow quickly over time with a little bit of patience. Meanwhile, me, I'd be working nights and weekends and living as frugally as possible to save every dime to make my trade trading career happen. Prior to when I started trading, I was working 60 to 80-hour weeks of manual labor during the summer, but it critically helped me build up a war chest of money to give me the longest runway possible to make it as a trader. A sixth segment, 15% of responses said they have time constraint issues. This speaks to just how many traders are pursuing this part-time. There is nothing wrong with that. However, you need to recognize how long and steep the learning curve will take while doing this part-time. My advice to you all is this. First, decide how seriously you want to take this pursuit. There is absolutely nothing wrong with trading being a hobby. You can always take it more seriously in the future. But if for now trading is just a hobby, don't feel guilty over it. Work when you can, enjoy it while you do, and make the process fun. If on the other hand, you want to aggressively pursue this, figure out what amount of time each day or week you can put into trading on a consistent basis. Make that time sacred and treat it like a second job. Make sure during that time you are 100% productive and focused. You still want to make sure you do reviews and write-ups of your trades. Use weekends for deep work. No cell phone, no internet surfing, no distractions. You need all of your time devoted to trading to be as productive as possible. The next biggest segment of data, 17% of responses, were issues sizing up. Part of this, of course, has a psychological component, but I wanted to dissect this topic separately. Many stated that they had issues sizing up due to being afraid of taking bigger losses. Others said they don't know how much or when to size up. Here's my general advice for this subject. A trader should only size up once they have a track record of the following. Positive expected value, meaning the trader is making P&L over a period of weeks or months. Ability to consistently follow their trade rules. And finally, they consistently follow their risk management rules. With at least a few weeks of data showing you have the ability to do the above, it can be time to start sizing up. Now, here is where most people go wrong, especially in the beginning before they've gained experience handling drawdowns. You want to size up far more gradually than most expect. So when one commenter stated that he was afraid of taking bigger losses, my rebuttal would be twofold. First, risk is an inevitable part of trading. You can't ever have bigger winners without taking bigger losses over time. To grow as a trader, we must accept and internalize that risk and recognize that we will have bigger losses. But second and more importantly, that trader was likely thinking of sizing up too aggressively at once, and that is why he was scared. We often only want to size up 10% or even 20% more at a time. Then we want to build our comfort level at that new sizing amount. The analogy I give is like that of one working out at a gym. The fastest way to grow your strength at the gym isn't by lifting as much as possible and getting injured. Instead, it is by gradually and consistently increasing weight over time, while minimizing chances of injury that will set you back. Trading is no different. One simple heuristic I use is to never risk an amount that, if lost, will damage your psychology. Most traders greatly underestimate how much their sizing will increase over the course of a year if they simply increase their risk by 10 or 20% at a time until they are comfortable with the new level. One trick I like to use to do this is what I call the sizing note card. I would have a note card at my desk, and on it, I would write how much I wanted to risk for each category of trade. Predetermining these values would minimize the amount of processing I needed to do mid-trade and also give me a clear, objective way to measure whether I sized the trade appropriately based on the modest growth amount I was aiming for. Over time, you gradually increase your risk amounts once the higher levels become the norm. So let's finally dive into the most common category of trader constraints, psychology, which has a whopping 25% response rate. 1 in 4 traders said psychology is their #1 obstacle. That's huge. Some of the issues mentioned included hesitation pulling the trigger, hesitating when it's time to size up, cutting winners too early, letting losers run, or just plain tilt trading after a bad beat. Because these are different issues, I'm going to break some of them down separately. The bulk of these issues, while they seem psychological in nature, they really stem from not having done a lot of the hard work building your trading system. I can tell that a lot of these traders don't have a playbook, and they haven't spent the time to predefine their entries, their exits, and their sizing. The reason why most people are hesitating or freezing up is because they are relying on too much subjectivity in the moment. A good trading playbook has you list out your plays. It includes all the qualities you look for in a stock, it has your entry rules, it has your exit rules, and it has your sizing rules. Trading in real time has so much information being thrown at us all at once. It's easily overwhelming. That is why you want to reduce those those decisions as much as possible. You want predefined game plans. If X happens, I will do Y. On this type of setup, I'll risk $100. On that type of setup, I'll risk $200. Build the system and rules beforehand so that you reduce as much of the decision making in the moment as possible. The reason I've made over $100 million in verified profits is because I've spent the time and energy building a good trading playbook. As a side note, it always bothers me when I see people say they need to cut their losers faster, or they need to hold on to their winners longer. Those statements tell me one thing: you don't have predefined exit rules. It's not about hindsight bias and magically hoping you hold on longer to the stocks that kept going. The bigger question is, did you cut your losses at your stop, and did you take profits in a way that followed your rules? If so, then great. There will always be trades that keep working. Our point isn't to be perfect and catch the whole move. That's impossible in markets. The point of having a trading system is to backtest various rules and then find the decision that works best in the aggregate. Now let's say you've done all that. You have your defined rules, yet you're still hesitating. Often this can come from a lack of confidence, or that we are too emotionally attached to the outcome. We are afraid of the loss. We are afraid of being wrong. The best solution? Lower the stakes. Trade one share position solely focusing on execution. This makes it so that your goal isn't to make money on the trade. It removes any form of pressure you're putting on yourself and allows you to focus on the process. Once you've successfully executed when the stakes are removed, slowly, gradually start to scale back up to normal trade size. Over time, more and more of this becomes muscle memory. The same way a musician relies on muscle memory to play on the big stage when they're nervous, you're going to build the reps and muscle memory when the stakes are low until you can execute when the stakes are higher. I find that many traders think they should magically be able to perform and size up, yet then they find their psychology prevents them from doing so. Congrats, you're human just like the rest of us. I actually share my biggest trading psychology lessons that I learned from the leading high-performance psychologist in this video, and I highly recommend you watch it after this one. Any large trader out there only got there through gradual, steady growth over time. So if you're comfy with $200 of risk, it isn't a surprise that you'll hesitate to put on $500 of risk. What you want to work on is becoming comfortable with $250 of risk, then $300 of risk. Traders greatly underestimate how much you can grow by making steady, consistent progress. If you saw yourself in one of those categories, understand this: you're not alone. Thousands of traders are fighting the same battle, but the difference is who takes action. I'll keep making free YouTube videos, but if you want to accelerate your performance, consider joining my trading course. Also, comment below which constraint you struggle with most from this video, and I might just make a video and go even deeper on various solutions tailored to your problems. So subscribe, turn on notifications if you want me to build solutions tailored to your problem, and let's start tackling these constraints together. See you in the next one.